Hi traders, Sam here. Hope you're doing well. Here are my thoughts on Verasity. This is what I see from a macro perspective. We had this formation take place and now we're breaking out of it. We can look at it as a channel and looking for these levels of top of the channel. It's just an assumption. However, if we look at from this perspective as a triangle breakout, which is more accurate, we can do two things. We can create the measured move. So the Fib 1 is likely to be a position of interest or level of interest. So that area here, previous bottom of support, is likely to be resistance. So that is our first target. If we look at from a Fibonacci perspective, and we're currently stuck on the 618, makes sense, doesn't it? Fib extension. Therefore, that is the next target. One. However, once we get to there, if we pull back, then we know that level is relevant. And if we were to go past that, then we know the channel is relevant if it pulls back, and then we can use that level as support and then go up more. From an Elliott wave perspective, we can make a few assumptions that is wave 1, wave 2, and we're looking for wave 3. Let's say that is wave 3, wave 4. Maybe we just get to 1.414 or 1.1618, breaking the all-time high. And if it's a bull market, it's probably going to do that. So that is our all-time high, which sort of roughly aligns with the 1.414 when we do the SIB extension. So there's a few things that are lining up. Confluence is the word that we use. When it lines up, it starts to make sense. When we look into the inner details, if I was to use this Fibonacci as the bottom and then use this top level as a reference, then we can also see the point, how this 0.382 area became resistance. Even the 0.5 took the hold. So we can see a bit of confluence there, but not too much from that reference. So it's not as reliable as we want it to be. So what we do is we use that Fibonacci and we bring it down to the bottom and then use this one. We look for the one sort of thing here, and we can see straight away that the 618 made sense. Yep, that is aligned with our expectations with the 618, where it's congested with support and resistance, and therefore now we see the fib extension, the combination, and now obviously by default that becomes support here. The one becomes support because of the previous high. So here is a box. And if you recollect our Wyckoff accumulation model, we have ARs there, right there, along. That is what we have right now there. So this is the SOS stage, the shakeout phase. You got to have a few different models that you look at. So our Wyckoff accumulation model in this particular case, and that's definitely a selling climax, as you can see. This SOS stage, and then we go bullish. So your accumulation, if it comes down once more again, it's worth buying because it's going to eventually take off. How would you do that? How would you approach this trade besides knowing the levels? One can look at this level and you can see you really want to go, and that's been there for a while, and then the Bitcoin drop has caused it a bit of damage, but you can see the buying. So that Fib 1 was it. That was very particular, took out all the liquidity. Here is if it comes back down again, if Bitcoin wants to drop a little bit more, that's your buying position. And the approach I would recommend, not that I'm giving you trading advice, is do it a small leverage, likely to not hurt you even if it drops down to here, your liquidity space. So make it a small leverage when it comes to there. As it goes more and more, you add more to your leverage until it breaks that level. So your accumulation is there because the thing is we could be here for a while. So you buy the dips and you might get a bit more of a higher low and a more higher low, and then you break out of this structure. Then once you get the breakout, you can start adding more to your leverage, I suppose. That is one approach. The other one is just buy and hodl and then do whatever you want. But that's what I'm looking at this point. The immediate target for that small range from there, and what do I do from there to there? Just that range has that target, I believe. Give us a sec. The other range, or the other target, well, this is a structure of its own as well, a mini structure within a bigger structure. Yep. So this structure, suppose, like that, has that target, and it's been done, give or take. So maybe it was the whole thing here, from there to there. So that is explained. That's the immediate structure. Then we've got the bigger structure, which is from there, and we can use that there, that neckline. And realistically, that's where we're looking for a higher level. That's a bigger target there. So when we pull back, it's probably going to be the next target. We do our fixed volume, and yes, maybe it hits that middle layer. Then if this is our A, B, C, D, that could possibly happen. Or we just do the 1, 2, 3, and then up. Just out of another macro picture, the bottom as a reference, we use the high as a reference, and we use this bottom as a reference again for Fibonacci. And you can see that 2, 3, 6. Extra lock resistance. We've got the 382. So it lines up with the 1.414. So, and then we've got all these guys here. So definitely this is going to be a strong resistance level. Can we hit the 0.5? 0.5 is probably the next level of major resistance because of that, but we've also got the 1. So we have our levels, and then we trade them accordingly. Definitely this is going to be strong resistance. However, you can have a big strong move to the upside, hit one of these guys. You could hit any one of these, and then we can use that level that's supposed to be resistance as support. So if it was to hit there and then pull back, then we rely on this as support because of the work that we've done just now. It gives ample weight for that to be support and then up more so. Now, from a Fibonacci perspective, as I pointed out, you can have many layers towards it. They all make sense. How you trade it is the key, and there's a few things that you need to know, strategies that give you confidence in that space. Now, one thing that I want to just talk about right now is the elliott wave count. Give me a sec. On a smaller time frame, if that is our 1, 2, we're still looking for 3. So on the smaller perspective, that could be 3, 4, and then 5. So let's just do that for a sec. So on the smaller time frame, we're looking at this potentially. Let me see. Okay, so if that's 1, 2 is higher than previous reference, so that's fine. I doubt this is a 3. See the strong move? Our 3 could be slightly higher there or further up to one of these targets. And then we get the 4, which might be that uses this. So I have a feeling, not just a feeling, that we can go past this like that, hit the 1.618, then use this level as support, and then go furthermore, and then we make a wave 5, wherever that case may be. We just need to see this to have a better assumption. And then we have another corrective wave, but you can see how that lines up. So we might be able to tap that or not, but there's a lot of liquidity there. This is the liquidity space, so we tend to mark that as well.
There you have it. Please give Sam a like, share, and subscribe to his channel to support him for doing more of these posts.